Yeah, detailed overview of Total PE-CE OI Diff tool. Okay, so I will first give you a detailed idea of the features that are available in this tool, followed by how it could be used. I mean, some of the guidelines on how to use the tool properly. The most important thing here, these inputs over here are the key. This is obviously just the symbol, expiry date, and the selected interval. I generally suggest, I wouldn't say advise, I would suggest a 10-minute interval because there would be about 3 OI updates in it. The OI updates every 3 minutes. So 3 updates would be there. So it would give you some idea, some good idea of how much OI has built up or unwinding has happened within those 3 updates. Just looking at a single update, this would mean just using a single update. So it may not give you a good idea because every 3 minutes the buildup could change, and then that would lead to confusion. So 10 minutes is a good time frame, as there would be 3 OI updates. About the strikes to be selected, I would suggest you start with all strikes to begin with. So this will give you a good idea of the overall market trend. So as you become more comfortable with using the tool, then you could switch to near ATM strikes or selected strikes. So there is a different way to use this. This could be useful. So I will discuss that a little bit later. So near ATM is again a little bit tricky as this auto adjust ATM strike. One needs to really understand what it is, because when you select this and say you are using 3 strikes, so when you enable auto adjust ATM strike, then these strikes selected, when you load the chart and when you select this option, then this is going to be your current at the money strike, and these are going to be the 2 other strikes that are selected. So 3 strikes are all as per what you have specified over here. So this auto adjust ATM strike means that as price moves, these strikes will keep on changing, and the whole picture over here will get changed. It's not that when you open, it'll use this as the ATM and then keep it this way when the ATM has changed. When ATM has changed over here, this whole data since morning will get changed. So it's bound to confuse people who are not aware of this. So you need to be aware of that. When you select auto adjust ATM strike, just look at the latest data that you see here, maybe last a couple of time intervals, time slots. So just check that data and focus on that data and just forget about the old data, because when you're saying auto adjust ATM strike, you are saying that you want to just focus on what is happening right now in the market, and then what has happened, you don't care about that. So you need to focus on that. So when you select this auto adjust ATM strike, when this is not selected, then this ATM strikes that are initially selected, when you load the page, they will not be changed. So you will have to change the strikes yourself, or then you'll have to reload the page if you want to just reorient the strikes to current ATM strike. So just please remember that. That is important. The lots checkbox will just change this OI that you are seeing, OI change and all that, to number of lots instead of quantity here. And the 1-minute chart option here says that you want to look at 1-minute chart instead of that selected time interval here. If this is not selected, then the chart you see is going to be a 10-minute chart. But if you want to see this unwinding and all that based on 10-minute time frame, but you still want to see 1-minute chart, then this is what you can enable. So this chart is going to be a 1 minute chart. Now here, this button tells you which chart you want to look at. This is the build-up and unwinding chart, where you see this build-up and unwinding happening over here. And the OI diff will allow you to look at the OI diff line and the call OI change, put OI change lines, and whatever lines you want over here that are available over here. So based on your preference, you can just select which chart you want. And this chart is a candlestick chart. If you want to see line chart, you can just select this button here, line or candlestick, as per your preference. So let us get into the main discussion. Yeah, before that, I need to just quickly tell you about the columns that you should select here. I suggest if you're doing intraday analysis, then I would suggest uncheck the OI related columns, the total OI for calls, total OI for puts, and the difference between call and put and call OI, and the percentage difference again for OI. So these are more relevant for positional analysis, and you could enable that when you do positional analysis. If you want total call and put volumes for the day, you can enable these columns, and time slot 10 minutes, every 10 minutes volume. If you want to see, then you can enable these columns. And these are the PCR you can keep enabled, and PCR OI change. We'll discuss about all those columns. OI change based columns, these are total call OI change and total put OI change. A day means this, these OI changes are for the day, for the whole day, starting in the morning. And these call OI change and put OI change, these columns over here, these are time slot based columns. So every 10 minutes, what is the OI change on the call side and put side? These columns give you that. Whereas these are for the whole day. For the whole day, this is the OI change. And for the last 10 minutes, this is the OI change. That is what this tells you. So I suggest, this is what you can use to begin with. Main thing for intraday, make sure your OI change columns are enabled, especially these call and OI change and put OI change, because unwinding is displayed over here. So this is quite important. So you can make sure this is enabled. So let us get on with the main discussion now. The most important column you need to look at is the diff of OI change. This is the put OI change minus call OI change for the day. So this is based on the day's OI change difference. So this will quickly tell you which side the market is. Once it opens, say about 3 minutes, 5 minutes after you get a couple of OI updates, you can start looking at it. And it'll tell you, once this is in red, it tells you that the put side OI change is less. If it is negative, then it means that the call side OI change is more and put side OI change is less. So this immediately tells you that market is negative. So of course, market can open negative. This is basically market is open negative here. And then once it moves up or wherever, then this will, of course, this will change. And this being the total OI change for the day and the difference, this might take some time to reflect. So you will have to then look at the 10-minute wise OI changes and the OI change trend columns to see where the buildup or unwinding is happening, where it is moving. So we'll discuss that in a moment. So this is the key columns, the diff of put and call OI changes for the day. Once this changes, this market trend is generally, it gives a clear indication that it has changed. But this can be slightly delayed at times, so you need to look at a few other things also that we'll discuss in a moment. So if you see once, let me go to that OI diff chart, which will plot this line. Let me turn this call OI changes off. This orange line that you see here, this line that you see here is this diff column plotted as a line here. So once this goes above 0, if it is below 0, then this is negative. So this 0 is this dotted line here. So once it is below 0, then it is negative. But if you see, so it takes time for it to go above 0 once once there is a gap in the morning. So then for it to change, the day's call and put OI change has to change, and that can take some time. So this will take some time to change. And when the gap is not large, or if there is no gap for the day, then this can give a very fast indication. So you can, if there is a gap, then you need to keep that in mind and then look at other points that are there over here, and then you can get some more idea about where the Y sentiment is going. So now over here, this, if you see, this has changed around 11:40, 11:50 or so. So that is when this has changed, actually 11:50. So this has taken some time. We'll see how to get ahead with the analysis a little bit before that. We can get some clues as to the direction of the sentiment. Again, this is just the sentiment. We are just discussing about market sentiment. This is only OI-based sentiment. So you still need to confirm with price before you take any trade. So now the next thing to look at over here, okay, this diff percentage is just this as a percentage of this data, call OI change plus put OI change. So basically, this is this figure number divided by this plus this. So that gives you this percentage. So this also quickly gives you an idea how strong the diff is and how it's moving. This PCR of OI change here is the OI change, put OI change divided by call OI change. So this again, this also will give you a very clear idea. As long as this one of these numbers is not negative, you will get a good idea based on which side this is moving. So once this is too low, like way lower than 1, so this is like 0.2, so it means that overwhelmingly this is negative. So then there is a chance that this might change, and that is what has happened because it is too negative here. So when it is too low, it is too negative. So if it is too low means a lot below 1. So I can't give you any fixed figures, but anything less than, probably less than about 0.4 or so, or 0.5, 0.4 or so is quite less. And on the other side, I mean, this can sometimes, based on your selection here, this can go really positive and really negative. So I'll mainly focus on the trend here, which side it is moving. Otherwise, this may not give you a clear picture just based on the numbers here. So let me just switch to all strikes. Here, this is not really that negative, but it's just slightly less than it. So it was not too negative here if you consider all strikes. But once you are looking at different strikes, then it could give you, if at a particular strike, if you have selected some strike, and at that strike, those strikes it is showing really extremely negative, then it is giving you an indication that the OI is imbalanced at whatever strikes you have selected. So that actually gives you a very good idea at what is happening at that particular strike. For all strikes, I mean, this is going to be like you can analyze like PCR. If it is too much above 1, it goes a lot above 1, close to 2, or above 2, like over here, then it is 2, extremely positive. And for all strikes, this is quite extreme reading actually, and far below 1 would be very negative. The next thing to discuss is our unwinding over here, build up and unwinding. So this will give you whatever time slot you have selected, time interval you have selected. This will give you that time interval wise OI change. So every 10 minutes, what is happening? So initially, when market opens, you'll see build up on both sides. And since this was like, what was the day over here? This was probably Fridays. Yeah, I think it was Friday. So Friday, you'll see huge buildup on both sides as positions are built up for the next expiry. So it will take some time for you to get some indication based on all strikes based unwinding on Friday. And even on other days, you'll see first 2-3 time slots, just buildup happens on both sides when people are initiating positions on both sides. So, but then once market progresses, once you see a big unwinding on one side, it means that the market could go on that side, because it just means that on the call side over here, lots of positions have been closed. So positions would get closed here only because there is a risk over here that people think, or traders think, that their positions are at risk because price is going up. Price has gone up over here, 200 points. So people, whoever has these positions over here, 40,400, 40,500, they are at risk because the market has gone significantly higher. So some traders are going to definitely close their positions to control their risk. So once you see this, then it means that people are perceiving risk on the upside. So market could continue to go upside. But if it's a huge unwinding, then generally what is going to happen is from that point, market can just turn. So you would have to look at this, then look at the price and see if the price is continuing on the upside, then probably market could continue to go on the upside. So which is what has happened here. At 10 o'clock, it gave. At 10 o'clock, this was done. Unwinding was done over here. If you see at 10 o'clock. So it means that market, this huge unwinding has taken place. So we did see some consolidation here. But overall, in general, the tendency would be for the market to continue to go up unless we see call side, significant call side buildup happening, which has happened here. But compared to put side buildup, it is less. So put side buildup is significantly more than call side buildup. So you would have to keep an eye on both of those things, and we'll discuss about that in detail a little bit later. But this is what one would generally do. So as you see that more and more unwinding is going on, happening on the call side, it just means that the market would continue to go up as you continue to see this. Now you'll see here that in general, you'll start seeing put side unwinding. We'll see over here, put side unwinding has started because people are starting to perceive risk on the downside. So whoever has shorted puts here, they have been shorting over here. As the market is going up, people keep shorting puts here. But once price falls down below this level, then all these positions, put writing positions, they are at risk. So they would have to start unwinding. So which is what is happening over here. So you need to keep track of this, which side unwinding is more, and then look at the price. And if price is following through on that side, then it means that the market could continue to go that side. Just a second here. Yeah. The other thing to look and decide on the direction of the general market is this overall days call versus put OI change. What you need to look at is these markers that you see. This red means the minimum OI change for the day, which is for both of these, it is low over here. And also at the same time, the high OI changes. So what is going to happen is when the market starts, you will see that more or less these are going to be moving together over here until all the buildup is done over here. And then suddenly what is going to happen is one side is going to stop increasing and the other side is going to, these are max levels. So if buildup is continuing to happen, then this will start increasing. Or it is at 120, the put side buildup stopped and unwinding started, which is what we see here. So it just indicates, and then this call side is continuing the buildup. So it just indicates that now the market is turning bearish. So you can quickly gauge using these relative levels of max and min OI changes to get a quick idea of which side the market is going. And you'll see when there is a very strong move in the market, one side will stop and the other side will just take off like anything. So on trending days, that will be very, very clear. And non-trending days, this would just not change and this would not give you any clear indication. Then you would have to use some other ways that we'll discuss just now. So for that, but keep an eye on this. This is quite useful again. Yeah, the next thing to discuss is unwinding with respect to various levels on the chart. Now, let me mark just very basic support resistance levels, nothing fancy, just wherever I'm seeing consolidations happening, I'm just going to mark, or key reversals happening, I'm just going to mark those levels just to see what has happened with the buildup and unwinding. So I just mark these lines over here. I'm just saying wherever consolidation is happening, nothing really fancy, just these lines over here, wherever I'm seeing some kind of a consolidation. You can keep checking these throughout the day. Mark those levels wherever price is. If you see now price is turning over here. So let me just mark this. Yeah, that's it. We'll see if we'll take it over here. And now let me zoom this. I'm zooming this to the morning. Now, the main thing to see here is that this is the first consolidation kind of thing that we have seen a little bit. Otherwise, it was market had gap down and then it just kept going up and up. We saw build up on both sides. You see build up is there on both sides over here. But the main thing to look at is over here. Let me point this out that if you see here, huge buildup was there, and the buildup here has decreased and turned to unwinding. So from large buildup to lesser buildup to again lesser buildup. Over here, if you see, it is clear now. See, from 9:30, where a huge buildup was there on the call side, the buildup has decreased. And buildup decreasing means probably the unwinding may not be starting, but at least the writing is slowing down significantly. It's obvious because price is increasing, so obviously writing is going to slow down. This is one. The other thing is you can look at put side. You will see that it is steady, significant. Even though it is decreasing, it is significantly higher compared to call side. Call side, if you see, unwinding started here, but put side has continued with the build-up over here. So that is what the main thing to look at would be here. What happens once the price breaks out here? Once this breaks out, since we are using 10-minute interval, it is a little bit far away. But here, by this time, once over here, it is clear that there's huge unwinding on the call side and big build-up on the put side. It is clear. It is very clear that once this price level has broken, there's huge build-up going on the put side and unwinding on the call side. So price could continue to go up. Now, after this, again, we got a consolidation. During this consolidation, again, monitor this. If you see, I've put my cursor on the call side. So you'll see that initially there was, at the start of the consolidation, some buildup was there on the call side. But later on, as the consolidation progressed, you'll see that the call side buildup decreased significantly. And what is happening to the put side? Put side also decreased significantly. But once it broke over here above, unwinding came up over here. Unwinding has happened on the call side, and put side buildup is put side. We have not seen an unwinding of put side at all over here throughout the consolidation. Let me highlight this. If you see throughout the consolidation over here, we have not seen put side unwinding at all. Whereas call side, we have seen a build-up there, but build-up has decreased. At the start of the consolidation, big buildup was there, but over here it turned to unwinding. So this is continuing. The uptrend is continuing. This is what this will give you some idea. Before this itself, you would have got some idea because call side buildup had decreased and put side unwinding had not happened. So that was probably a clear indication actually. So once this this goes ahead, if you see over here, it is more or less the same. Even though in the consolidation call buildup increased at the breakout point, call unwinding happened. Put side, no unwinding seen throughout. After the since morning, no unwinding was seen, and then buildup continued. Even over here at the breakout point also buildup continued. And this huge buildup is seen over here. Huge buildup here. Buildup here and the call side has increased. And on the put side, it has started to decrease. First time you are seeing unwinding happening over here. And after the breakdown, immediate lot of unwinding is happening. Call side, if you see call side, for this particular consolidation, it is very different from these consolidations. This consolidation, call side buildup has remained steady. Unwinding has not happened. And put side unwinding has started big time. Huge unwinding seen over here. And for this particular level, you see call side, big unwinding is there. And call side, big buildup is there. Put side, big unwinding has happened over here in this consolidation. So that's the basic idea. So look at consolidations and see which side the buildup is happening, if unwinding is happening on which side, and analyze in the buildup and unwinding in context of the ongoing trend. And whenever in a consolidation you see some significant change happening, then that is the idea that whichever side unwinding is happening. So it could be that that side the market could go. So that's the idea about this buildup and unwinding. Now, so that's about it for this. You could also, last thing to point out here is you could also look at the futures price change that is going on and futures OI change that is going on. This is for the whole day as such. And this is for the time slot. So you could also keep an eye on where the price is going. Futures only over here, price has gone below VWAP. So that could give you some idea about the overall trend that is going on. But focus on these things that we have discussed, mainly buildup and unwinding, and buildup unwinding overall, and also and these overall OI changes and how they are moving, the max levels, and also buildup time slot based buildup and unwinding based on the price structure. Wherever consolidations happening, just dig and look at. You will also have time over here because just market is going sideways. So look at what is happening internally in the OI sentiment, and then cross-check with price, where price is going. Just analyze in context of that trend that is going on. So that's it for this tool. Thanks a lot.